Everyone, now we are going to start Fund Flow Statement Unit 5. First of all, let us know the meaning of flow of funds. The flow of funds means the inward and outward movement of a fund of an enterprise. For the purpose, fund refers to working capital and flow means movement or changes. Therefore, flow of fund means movement or changes in the working capital, that is current items. Now let us know the fund flow statement. What does it mean? The fund flow statement contains all the details of the financial resources which have became available during an accounting period. This statement discloses the amounts raised from various sources of finance during a period. It explains that how finance has been used in the business. It is a very useful tool in analysis of financial statements which analyzes the changes taking place between two balance sheet dates. Now let us know how we prepare the fund flow statement. The changes which occurs in the current account as a result flow of funds are reflected in a statement known as schedule of changes in working capital. The similar changes in non-current accounts are shown in fund flow statement. Therefore, following two statements under this category are there: statement or schedule of changes in working capital, statement of sources and uses of funds or fund flow statement. So first is statement or schedule of changes in working capital. Before seeing the statement, let us know the rules of fund flow statement, that is schedule of change in working capital. First rule is an increase in current assets will be shown in schedule of change in working capital as increasing working capital. The decrease in current assets will be shown as decrease in working capital. An increase in current liability will be shown as decrease in working capital, and decrease in current liability will be shown as increase in working capital. Now these four rules will be followed in schedule of change in working capital for showing its effect on working capital. Now how we will make the statement? First of all, we will write the items, that is current assets and current liabilities, previous year, current year, and effect of increase. Either the working capital will increase or will decrease as according to the rule we will apply. Now current assets will be like cash in hand, cash in bank, stock in trade, debtors, bills receivable, advance payment, short term investment, prepaid expenses, accrued income. Total of A will be written here, and the effect of previous year and current year. If it will increase, then accordingly we will apply the rule, and if it will decrease, then accordingly we will apply the rule. And current liabilities will be short term loans, bank overdraft, creditors, bills payable, outstanding expenses, unclaimed dividend, etc. That will be the total of B. Now according to rule we will show the effect of current liability. Now the working capital formula is current asset minus current liability. If the current asset or current liability will increase or decrease, accordingly the working capital will be increase or decrease. If suppose the answer is more in increase, then the balancing figure will be included in decrease and the answer will be increase in working capital. If the decrease side will be more, then the answer will be in increase and it will be written as decrease in working capital. Now the next is fund from operation. Before making fund flow statement, we make fund from operation. The answer of schedule of change in working capital and fund from operation is included in fund flow statement. In fund from operation, or in other words, which is called as adjusted profit and loss account, in this, on the debit side, we include debentures, loss on sale of fixed assets, underwriting commission, discount on issue of shares or debentures, preliminary expenses written off, deferred revenue expenses, goodwill written off, patent, provision for taxation. And on the right hand side, that is the credit side, we write profit or gain on sale of fixed assets, dividend received, income received, profit on evaluation of assets. Means all the incomes will be written on the credit side and all the expenses will be written on the debit side. The answer will be either fund from operation or funds lost from operation. If the debit side is more than credit side, then the answer will be fund from operation. If the credit side will be more than debit side, then the answer will be funds lost from operation. Now accordingly, these answers will be carried over to the fund flow statement. Let us see the fund flow statement. Now in fund flow statement, on one side it is written as sources of fund, and on the other side, that is credit side, it is written as application of funds. In sources sides, the following items are included: issue of share capital, issue of debentures, raising of long-term loans, sale of fixed assets, interest received, dividend received, refund of taxes, decrease in working capital. That means the answer which is taken from schedule of change in working capital. And last is funds from operation, means the answer which is taken from adjusted profit and loss account. On the application side, it is written as redemption of preference shares, redemption of debentures, payment of long-term loans, purchase of fixed asset, interest paid, dividend paid, payment of interest, and increase in working capital, as well as funds lost from operation if the answer comes in adjusted profit and loss account. Now it should be remembered that the total of fund flow statement, it will always be equal, means the debit side should be equal to the credit side in fund flow statement. Thank you.